Hey guys, it's Aman and Christina from the Our Rich Journey podcast, where we answer your questions about saving, making, and investing money for financial independence and retiring early. Today's question is one of those questions where people want to know what we did, right? I like these questions because, of course, we can always share how we approached our investment strategies. And this one has to deal with what percentage we invest in real estate and what percentage we invest in the stock market. What's our allocation between our two favorite asset classes?
Yes, we have an asset allocation question. So we are going to go over this question, but I want to tell everyone that is listening, if you guys have questions about what we do, our experience on our FIRE journey, how we invested, or as it relates to questions that you may have about your own specific journey, please make sure you submit your question to us. You can go to ourrichjourney.com/podcast so that we can play your question in a future episode and answer that question. But in today's episode, we're going to be talking about asset allocation. And I know you're excited about talking about it because we get to talk about real estate and stocks. It's an overall investing question.
Speaking of, we may not get a chance to talk about the tiny house in this episode, but I want to bring it up now because I'm so excited about our brand new tiny house that we have here in Portugal.
Yes.
If you've never seen a tiny house, you need to go watch our YouTube video about our little miniature home. It's just so much fun to be working on this, and it's eventually going to be an Airbnb.
Yes.
So we are going to get a chance to share this home with so many people. Right now, we currently have one Airbnb here in Portugal, and I just love it when guests stay at our house. They have such an amazing time, and we've even had some people that have stayed at our house and that have ended up moving to Portugal.
Yes.
Right? That's so exciting because they use our house, and maybe our house is not the best example of a home in Portugal because we set that bar so high with our Airbnb that people come to our home, they enjoy the area, they see what the Silver Coast has to offer, they end up staying. It's just, to me, that is so rewarding.
Yes, but you didn't share enough about the tiny home.
Oh, yes.
Let me brag a little bit for you because we have the tiny home now. You built an entire deck for the tiny home. You started off with Sanoa, then school happened, and then basketball happened, and then it was really just...
It was just me out there.
It was you
Solo dolo.
It was true. That's true. It looks so beautiful.
Yeah.
And now we're almost complete with the finishing touches inside the tiny home.
Well, that's when you come in. You come in at the end to do your thing, to get that credit so you can use we. But yes, we will finish the tiny house. You might even say we built that deck because you usually come in at the end of the process and you say, Aman, I noticed you need to fix this part of the deck. And then you can say we. But
okay,
I do appreciate that.
I am going to say we because I carried some of the wood for the deck over, and if you can't carry the wood over, you can't build the deck.
I wish, for the people that are listening to this, they may not be able to see my face, but the people on YouTube, you already know the face I'm making. So.
It was supposed to be a brag for Ahmad, and now it's turned into this. Watch his face. Okay.
Yes.
I'm going to get back to this question.
What's the question again?
This question is about asset allocation and splitting our investments between the stock market and real estate and how we really decide on that. So let's listen to the question and then we'll get to the answer.
Hi, Aman and Christina. As you are both are investors in the stock market, primarily with index funds, and you are both real estate investors, I was wondering what % of your total asset allocation is in real estate? I like the fact that real estate investing can provide consistent monthly cash flow, and you can be more in control of that cash flow than, say, compared to index funds. But I was wondering what % of an asset allocation do you consider appropriate in real estate? Thank you.
I really like this question. I like also that he points out the difference between the stock investment and the real estate investment, which is that real estate you have more of a control over in terms of what you can do to potentially increase your profits. So like you said, We had control over picking the right property, in the location. Even the way that we design it can attract a different level of profitability than we can if we're investing in index funds where we have less control. One of the things about real estate, of course, though, is that with more control, you have more activity with your
More work.
investment. More work, yes. And so when you're investing in real estate, you have to think about the level of work that you're going to be putting forth in that real estate versus the level of work that you're putting forth with a stock market investment. And he mentioned he understands that the majority of our investments are in index funds or ETFs, but they're in broad investments where we have to do very little research with the investment. So our stock market investment is very passive.
And I'm glad that you pointed out the level of effort that is required between the two asset classes. Because when you are talking about investing in real estate, you really have to make that self-assessment and identify, am I willing and able to put forth that much effort into real estate?
Yeah, and definitely there's different types of real estate that will require more work than other types of real estate, or if you hire a property management company, it may require less work, although you're still working with a property management company and overseeing the work that they do. So there's still a little bit of work involved with that. But one of the things, like you said, you have to think about is the level of work that you're willing to put into your investment. But this caller is specifically asking about asset allocation. When we divide up the amount of money that we have for investment, what percentage are we going to put towards real estate and what percentage do we decide to put towards the stock market investment? And I think our answer is going to be interesting to people in that we actually don't have a set percentage for the difference between our real estate investment and our stock portfolio investment. And the reason for that is we start off with our goal with real estate. What is our goal? What kind of income do we want to generate with real estate? And how can we get there? We're not thinking about a percentage yet because our goal with our real estate is to develop a real estate portfolio that will pay for our expenses in retirement and then give us additional income beyond that. So right now we have the one Airbnb that is our larger home, and now we're adding on the tiny home. The one Airbnb alone pays for all of our expenses here in Portugal and more in addition to that. The tiny home will almost double the profits that we get because of the way that we can market the tiny home. So I mention this because we don't focus on an asset allocation in terms of percentage because of the work involved with real estate. If we said, for example, we want 50% of our money in real estate and 50% of our money in stocks, what happens is that when the stock market begins to perform better and better and better, that means our allocation starts switching. It becomes no longer a 50-50 split, for example. We may end up with a 75-25% split. Now, if we want to stay at, for example, a 50-50 split and the stock market starts to go really, really well, it means we have to do one of two things. We either have to sell some assets in our stock portfolio and use that to buy real estate, or we stop putting our investments in the stock market and we use that money to invest in real estate. In either scenario, it means buying more real estate in order to maintain that percentage. And that's why we don't do a percentage, because there's only so much real estate that we want to invest in. There's only so much work that we want to put into investing. And if we have to continue to buy and buy and buy and buy more real estate, it becomes something that's not sustainable for us in terms of the work that we want to put forth for our investments.
I think that always surprises people when we break it down like that, but it just makes so much sense. I mean, think about how the value of the stock market can continue to go up, right? Does that mean that you must always be constantly buying real estate? I mean, you could do that, but at least for us, we don't want to take on that much real estate. We've said this before. You can become financially independent with just a couple of pieces of real estate. You don't have to own 100 homes, and we don't want to do that. We just want to have our little fair share of real estate that sustains us, and we want to be able to be hands-on with our real estate because we have fun doing it. And so our asset allocation for real estate, when we're looking at it compared to our stock portfolio, It's definitely not a 50-50 split. I mean, it's way lower than that. And we wouldn't want to maintain that asset allocation mix. On the other hand, with our stocks, we have an asset allocation plan that we have with stocks based off of investing solely in equities. You know, a 50% here, 20% here, 30% here, but that's all within the stock market. We don't carry that same type of asset allocation strategy into our real estate investments because we think about the level of effort that would be required to maintain a very large real estate portfolio.
Right. I mean, could you imagine all the decks that you would be building?
Now, of course, we could be more efficient. We could hire people to do these things, but this is actually what I wanted to do in early retirement, right? I wanted to be hands-on with my real estate. I didn't want to build like a huge real estate empire that I couldn't manage myself. I wanted to spend more time building decks, designing tiny homes. Now, we may get to a point where maybe we do take on more real estate and the value of our real estate becomes more proportional to the value of our stock investments, but I doubt that. I feel like we are at a place where we are content with what we have. Maybe we might take on a couple more properties, but we're very happy with what we have.
Yeah, so I would suggest for people that are thinking about these two very different asset classes, I would suggest that you figure out what it is that you want to get from these investments. The caller says he likes the idea of investing in property because he has more control over it and he can get that consistent income with real estate. And if that's the case for you, then you have to think about what type of income do you want from real estate? Think about it like that. Do you want to get all of your income for retirement from your real estate investments? Then how many investments would you need in order to do that? Do you want to get maybe 50% of your income to pay for your expenses in retirement from real estate? Then how many properties do you need for that? It doesn't need to be a percentage of real estate versus a percentage of investments in the stock market. Your real estate investment just needs to be tied to the amount of income that you want to generate in order to pay for your expenses in retirement. And you should be thinking about it like that.
I will say one thing about the individual that has 100% of their investment wealth in real estate. You have to be careful about that, especially if your plan is to live completely off of that real estate. It's almost like having like all of your eggs in one basket if you're not diversifying amongst many pieces of real estate. So if I was gonna solely live off of my real estate portfolio, it would have to be a good mix of real estate, right? Maybe in various areas, maybe different types of real estate, be it single family homes, multifamily homes, commercial real estate. There would have to be a good mix because I would hate to have all of my wealth, 100% of my wealth, and potential retirement money in the same neighborhood, in the same couple of houses. Because what happens if that city, if that neighborhood goes under, then there goes all of your retirement. Now we have more diversification than that because if our real estate stops producing income, we can always live off of our stock portfolio and vice versa.
Right. We're in a situation actually where we have enough investments in our real estate so that it can pay for all of our expenses in retirement. But if we had no real estate whatsoever, we also have a situation where our investments in the stock market can also pay for all of our expenses in retirement. So it just comes down to a matter of thinking about those expenses in retirement and how you ultimately want to generate income from that. And very importantly, the amount of work that you want to put towards your different types of investments. So hopefully that gave you some things to think about. Of course, you're not going to be in our same situation, but I think applying that type of reasoning and really thinking about it in terms of the way that we described may help you determine how much you want to invest in real estate and how much you may want to invest in the stock market. Again, for those of you that are out there that are listening, if you guys have questions for us, please leave them for us. We love listening to them. You can go to ourrichjourney.com/podcast to leave us a question so that we can use in a future episode. Again, thank you so much for listening to this episode, and we'll see you later. Remember that we are not financial advisors and the views expressed by us are solely for entertainment purposes. You must make responsible decisions, and that means making decisions based on the thorough independent research that you conduct. Thanks for listening.